But Capital First, not surprised there's a big move there either. Almost 5.5 or 6% higher. Splendid PAT performance, good revenue growth. Vaidyanathan, CMD of Capital First, joins us right now from Mumbai to speak about the numbers and the outlook ahead. Really good having you. Thanks so much for joining in. So put the quarter into perspective. The revenue growth was fairly impressive. I'll come to the bottom line, but almost a 33% top line growth or income from operations, as the case may be. What's gone into this, and is this kind of momentum sustainable for your company?
Well, first of all, the loan book for the company for the last quarter has grown to 11,700 crores, up from 9,600 crores same period last year, December 13. So that has substantially added to the net interest income for the company and the fee income. So together the fee income and the NII has increased for the company from 110 crores same time last year to 175 crores. That's an increase of 65 crores. That after expenses has translated straight to the bottom line.
Mr. Vaidyanathan, and the only question on everyone's mind is, can you replicate this performance quarter after quarter or no?
Well, you know, the opportunities for growth in this business are very much there in the years to come. I don't see any problem for growth. So as long as the top line keeps growing, you know, this is the operating leverage keeps growing. If you can see the expense line, it has not grown in line with the income. Obviously, 100% growth year on year can't be sustained forever, but obviously it will taper off over the period of time. But for the company to expect to keep posting increase in profits quarter on quarter over the next many quarters is a very fair expectation. If you see the numbers for the company over the last 8 quarters at a stretch, we started from a net profit of close to 5 crores 8 quarters ago, and every quarter it's been inching up to reach about 30 crores as of last quarter. So to people watching the program, I can say that the trend is sustainable in terms of direction. Now, percentages of growth, obviously 100%, no company sustains forever.
Yeah, which is fine. I think people will like it just the way you're doing right now as well. But you know, I just wanted to understand within the different segments, is it, I mean, the SME business which is doing very well, or are you seeing a tremendous traction in consumer durable loans, two-wheeler loans, or loan against property for that matter? Which segment is driving up growth for you?
Well, you know, these 4 segments that we have picked up are all doing very well, and the mortgages business, as you know, the big part of our company is or of our portfolio is lending to customers against property, or lending to actually business people, small entrepreneurs against their property, and that business is really doing very well. I think there is absolutely no dearth of demand. That has probably grown by about 30% in the last year. The other businesses are two-wheelers, durables, and so on. So we are actually seeing a revival in the consumer segment. Actually, if you see the car sales numbers, see the consumer durable numbers, they're all looking up between 5 to 10% to 12% over the last 4-5 months. I think that is directly feeding into the increased volumes. So as long as the Indian economy keeps growing, this business will keep growing, and I don't really see any problem in being able to grow at the 25% sort of guidance we've been giving for a while.
Your asset quality seems a little bit under pressure. How much of your total book is secured?
Asset quality is not under any pressure at all. If you see, the gross NPA is only 0.63%, which is really good by any standards. Net NPA is low because, of course, we provide quite aggressively. So asset quality is not under pressure at all. In fact, most of the businesses that we are lending, close to about, let me say, close to about 95% or so is secured. So really, there's no issue at all on asset quality.
Okay. If at all, there would be an immediate concern from a stock market perspective completely. It could be the marginally lower return ratios, maybe compared to a couple of other peers of yours. Now, what's the pickup that you anticipate there? And if you can actually give me some timelines as well. I mean, various other NBFCs have given me timelines that by end of FY16 or end of FY17, we believe ROE or ROA could actually inch up to these levels. What is your internal target there?
Here, we should understand the phase of the company vis-a-vis, let me say, more evolved non-banking finance companies or banks. We practically started on this journey maybe 3 or 4 years ago. So we are pretty much in a build-up stage. So which is the reason you will see that the profit of the company is also moving up quite sharply over the last maybe 8 quarters. So if you see the numbers for the last year, we posted a profit of about 50 crores. We have been guiding that we will post a profit of over 100 crores this year. That's a growth of over 100%. Probably it looks now that we can up the guidance a bit. The next year looks again very strong for us. My first get numbers on this front would be about an increase of about 50-60% next year, even over this year's numbers. So, naturally the return will follow, and already return on equity is inching up, has doubled over the last year. So there is no doubt at all that in the years to come, we feel very confident of reaching, let me say, higher sort of mid-teens in return on equity, because the company is really well set for that. We just got to build the book more and build more operating leverage. There is no problem in building return ratios here.
Okay, fine. So, but are you giving me a number there? I don't know if I actually spoke the number and I missed it. Are you giving me a number, say end of FY16 or end of FY17?
See, we really don't have any deliberate plans or ideas as a strategy to go and to give guidances to the marketplace. But because we were in the early stage, I thought it was important to give such guidance. So, like I said, this year we feel confident of posting northwards of 100 crores of profit after tax. If you see the trend line, 30 crores of profit this year, you can straight away multiply by 4 and get a sense of what the next year is going to be. Add to that growth, which is reasonably feeling good about. So, we can draw conclusions, but for us to basically, you can probably inch it up by about maybe a 40 or 50% over this year's numbers into next year. We feel quite good about that.
Okay, well, I'm welcoming this. I was actually asking you for a number on the ROE or the ROE FY17, but even this is welcome, Vaidyanathan, not a problem. Now, one final question from my end at least. You recently got that housing finance company license as well from NHB. Where do you see the housing finance book over the next 1 or 2 years, and are there any plans for inorganic growth here?
First of all, that doesn't, as very well documented and rather well documented, the housing finance business is really a good business. It's a huge opportunity in India. That business for us has already grown to over 190 crores as we speak, in the housing finance company. We feel that for that business to grow by over 50% or so next year should be very much comfortable for us. So, we are operating in largely the, so to say, the self-employed home loan customer segment, which is not really the salaried home loan segment, because we feel the margins returns are slightly better there. And that's a good business and really long-term business for us, and we expect to have good returns in that business. I think there is no issue on that front actually.
Your CAR is at 20.2%. Is the current capital sufficient to meet your credit growth plans? Would you look to raise further capital in this year?
Yes, we have taken an enabling provision from the board for raising rupees 300 crores of equity. We did that maybe 3 or 4 months ago. As and when the timing is right, we still have a window of close to maybe 7 or 8 months more to raise that amount of equity. It is there on the horizon. We haven't really picked on a particular month or maybe year end of this year. We don't have a specific agenda for that in terms of timing, but it's on our horizon for sure. But really, for a capital adequacy of 20.1%, there's no here and now pressure for raising it.
Great quarter. Thanks so much for joining in, and we wish you all the best. Hope you replicate or even better this performance going ahead. But great quarter. Congratulations on that.
Thank you, Neeraj, for your wishes, and Aisha, to you as well. Thank you.
Okay, and that's Vaidyanathan of Capital First. Splendid quarter, more so on the bottom line as well, and optimistic about the quarters ahead. 4.5% up or 5% up in the session today is Capital First. So, well, good company. Most people bullish on this one. But from a trader's perspective, Mitesh, you want to come in here?